I'm Taylor Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour.
It's a very complex project, and as you say, it's risky.
Facebook CEO Mark Zuckerberg describes Libra as complex and risky. More on his testimony in front of a House panel Wednesday on Capitol Hill. Plus, the path to profitability. Tesla reports third quarter earnings, shares spiking in after-hours trading on a surprise profit. We have the latest. And cloud carries clout. Microsoft's first quarter revenue beats the highest analyst estimates. Demand for cloud services comes in strong, but may be waning. We'll explore. But first, to our top story. Facebook CEO Mark Zuckerberg fielded questions from the House Financial Services Committee on merits of its plan to establish its own digital money called Libra. And while he struggled to convince them of Facebook's plan, he did share one major view with lawmakers.
This project is too big for any one company to do on its own, which is why we set up this independent Libra association with a number of other companies and nonprofits. It's a very complex project, and as you say, it's risky.
For more, we head to Washington, where our own Kurt Wagner is standing by. He was at the hearing. So, Kurt, give me your first key takeaway.
People still do not trust Facebook. I think that was the overarching theme from a lot of the questions that we heard today. A lot of the feedback from the members of Congress was basically pointing out things that Facebook has done wrong in the past and asking the question, given your track record, why should we trust you with Libra, with people's money, with a new cryptocurrency? At the end, I think it was Representative McHenry, after almost 6 hours of questions and testimony, he says, I'm not sure we learned anything new here. And it was, a little bit of a unfair blanket statement. But at the same time, I think despite the fact that we had all this time to hear from Mark Zuckerberg, we didn't really walk away with a bunch of big questions answered.
Kurt, when pressed on why we should trust Facebook, what was his response?
Well, a lot of the response was actually similar to the clip you just showed, which is this idea that Facebook is just one of 21 different companies that are now overseeing the Libra cryptocurrency. So Facebook is basically putting out there that, hey, we are not the only people making the decision here. We want to work with regulators. We want you to tell us how this is going to work, and it's not going to be only our call. That's obviously a very important element of all this, right? Because for those people who do think Facebook has too much power, or who think Facebook cannot be trusted, the idea that they're bringing others into the fold, or that they're going to be following rules that someone else creates, that is going to give them a lot more flexibility to actually get this thing off the ground.
And Kurt, we heard him also bring in China and basically saying if we don't do this, China will, and so we have to do this to get ahead. We have a soundbite from what Zuckerberg was saying about China. Take a listen.
As soon as we put out this white paper on Libra, what we saw was, in China especially, they immediately kicked off this public-private partnership with some of their biggest companies in order to race to try to build a system like this quickly, a digital renminbi that they could use as part of their Belt and Road initiative, their kind of foreign and economic policy to grow influence throughout Asia and Africa and other areas.
Kurt, is Zuckerberg right in bringing in China here, or is he just playing to all of our fears about China's taking over?
I think there's probably some validity to this concern, right? This idea that there are companies and the government in China that really wants to accomplish a similar problem, and they have the technical ability probably to do something like this. I do think that this is a very convenient argument to make, especially right now and especially in front of this Congress, given all the issues that we're dealing with China, with the trade war and all of that. It does seem like now is the time to kind of play up this fear that maybe China is the real threat here. And we heard him say this last week, too, when he gave a speech at Georgetown about free expression. He also talked about the internet rules that they have in China. And if tech companies like Facebook don't support free speech, you may look up one day and realize that that's gone from the internet because Chinese companies are controlling it. So he has played on this China fear before.
Kurt, we also talked a lot about political ads. Remind us again what you heard today from Zuckerberg on why he does not want to be the arbiter of news and fact-checking these political ads that we're getting from politicians as we head into election season.
He has been pretty consistent over the last week or so about this question. He's been asked it many times because he's been doing a lot of press. So we've heard him answer this question time and time again. And really what he says is we don't want to be in a world where tech companies are responsible for determining with 100% certainty what is true and what is false. And he says, I don't want to be in that world, and you probably as a Facebook user shouldn't want to be in that world either. And so that obviously creates all kinds of other problems. But the general perception here is that Facebook does not want to be picking a side. And if it were to go out and say, hey, we're going to block this ad from President Donald Trump or from, Senator Elizabeth Warren, does that constitute them actually picking a side one way or the other? They don't even want to have to deal with those questions. So as a result, they're going to let things fly, and they're asking, journalists, but also Facebook's users to be smart enough to figure out what's true and what's not.
Bloomberg Technologies' Kurt Wagner, thank you for joining. Now, Tesla is also out with third quarter earnings, $6.3 billion in top line revenue. It is the first decline in revenue since 2012. But the stock is jumping in post-market trading because Tesla is managing down that income statement and posting bottom line earnings per share beat of $1.86 versus estimates of a loss of 24 cents. That is an unexpected profit. So joining me to discuss it is Joe Osha of JMP Securities, who currently has a hold on the stock. Also with me in New York, Bloomberg Business Week's Max Chafkin. Joe, let me start with you. A surprise profit.
Indeed, yes. You mentioned the bottom line numbers already. The real surprise for us was the company's gross margin, which was significantly higher than we thought, and which I think drove those bottom line numbers you talked about.
What is that gross margin? What were we looking for? What did we get?
To give you a sense of it, we were forecasting 15.1% at a GAAP level. They came in at 18.9%. That, for a company like Tesla, that's a big difference, and it surprised us.
Max, let me pull you in here. How surprised are we by the profit in the third quarter? We thought maybe it would be elusive for a little bit.
So, Elon Musk, Tesla CEO, and the company have been saying that this is the big goal. They've been sort of saying, that we got the production right now. Now it's just all about, getting costs down. And I think, because Tesla has been so chaotic over the last, 18 months or so, there's been a lot of skepticism. But, this is a case where they've delivered, where there's more money coming in than's going out. The cars are selling in ever greater numbers, and when you look at kind of what they have ahead, obviously there are pitfalls, but they're opening this factory in Shanghai, which is gonna potentially be great for sales. And the investor letter that they just posted says that they're ahead of schedule on the Model Y, which is that compact SUV. That's the sort of top selling consumer car category here in the U.S.
Now, Joe, we know from a lot of these companies that you cannot cut your way to growth. The problem here is that top-line revenue growth is falling for the first time since 2012. So while you're able in one quarter to manage and get a beat on the bottom line, how concerned are you now that going back up to that top line, you're not seeing growth?
I think that's a good question, and that's why we moved from a buy to a hold on the stock when the company released its Q3 numbers. They've surprised us at the profitability level, but we're still a little concerned about demand out there. So I think getting this Model Y out into the market and ramping in China is enormously important because, as you point out, this company does need to generate growth.
Max, we should note that Tesla in after-hours trading at $292, it is poised now for the highest since April. So clearly investors here very surprised and happy with the company. As we talk about profitability, walk me through again the mix between the three, which is higher volume but lower margin, versus the S and the X, and then production of the Y.
Right. So the S and the X have been, the high. Those are sort of the higher margin, like kind of luxury vehicles. The 3 is, kind of a middle range, kind of mass market car, or just sort of upper mass market maybe. And the knock here was that Tesla had been doing all of this kind of, all these contortions to get the price down, to get it as low as possible, and that was going to cut into sales of the S and the X. That was going to destroy margins. Now what looks like to be happening is that 3 sales have been so good, and Tesla has been so good at keeping, margins in check and sort of getting their manufacturing process, which was, so all over the place for so long, kind of under control, that it looks like, they're making the numbers work. And at the end of the day, this is a much cheaper kind of luxury car, but it's still a pretty expensive car. You have all of these kind of add-ons that Tesla has been pretty effective at selling, including these, sort of autonomous or semi-autonomous add-ons. So there are lots of ways for them to get a little extra margin on this thing.
A drop in revenue, does that show you that demand in the U.S. is saturated?
I'm not sure I'd say saturated. I do think that they have accessed most of the early adopters already, and as we were just discussing, you're getting to the point now where you've got to deliver reduced prices and better economics on the Model 3 to keep volume growth going. So I think the business can grow. I think the rate of growth may attenuate a little bit here until we see, again, China come online and then the Model Y.
Well, and they did just open up that big factory in Shanghai. They're really to look at producing 1,000 cars a week in that factory by the end of the year. Is that what you need to see out of the numbers from China to make sure you are getting that demand?
Certainly China helps. We had 5,000 to 10,000 units for this whole year in our model, so it sounds like we're pretty close. That will help at the margin. I do think that it's going to be very important for them to get the lineup of products refreshed in the U.S. and Europe as well. So what we got surprised on here today really was the gross margin. As we've discussed, it's much more profitable than we thought. The concerns I articulated about demand and the rate of growth are honestly still there.
And Max, let's push this forward. So Tesla coming out and saying that they are confident they can still exceed at least 360,000 deliveries for this year. We were looking for 360 to 400,000. As we take a look out on the full year, how confident are we now that we can meet that annual target?
I mean, look, this is a company that is, famously a little bit freewheeling. I think, it's honestly hard to say. That said, them coming out and putting that out there, you got to take that as a good sign if you're an investor. Now, the one thing I will say is a lot of this future growth, as Joe was saying, is dependent on China. And you know what? Like, China it's very politically chaotic right now. Obviously, Tesla has done very well, has opened this factory with remarkable speed. There are beautiful pictures of the factory that are in this investor letter that they just posted. But with anything with China, you got to look at it as as something that you should be cautious about, because at any point the trade war, which obviously seems to be kind of simmering down a little bit, could heat up again. And we have a tech CEO doing car manufacturing in China. That is potentially politically sensitive.
Instant analysis from Joe Osha of JMP Securities and Bloomberg Business Week's Max Chafkin. Thank you both for joining.
Thank you.
And coming up, Microsoft's cloud efforts pay off for CEO Satya Nadella as the company beats analyst estimates, but there are signs demand may be waning. We get a full picture ahead. And as we go to break, PayPal also exceeded analyst estimates when it reported third quarter earnings on Wednesday. Early this month, PayPal became the first to pull out of that Facebook-led cryptocurrency project. The stock was up 15% for the year at the close of trading on Wednesday. This is Bloomberg. Microsoft reporting first quarter results as well on Wednesday. Sales and profit topped analyst projections, lifted by demand for the Azure cloud computing programs and internet-based versions of the Microsoft productivity software. Joining me on the phone to discuss it is Jefferies analyst Brent Thill. He currently has a buy rating on Microsoft. So Brent, you have to hand it to the company. 14% top line growth, the 9th straight quarter of double-digit growth. How are they getting there?
The cloud, they're crushing it. It's absolutely incredible at $33 billion run rate that that they accelerate actual constant currency growth from 15 up from 14 last quarter. And they have really embraced the shift to cloud. So both Amy Hood, the CFO, and Nadella, CEO, really got ahead of this, ahead of anyone. They're taking share from Oracle, IBM, many others in the industry. And we think that the momentum continues. What's notable is that they have massive backlog, meaning many of these contracts they're signing, they're not recognizing the revenue in the quarter. They're recognizing the revenue over multiple periods. So the future visibility for investors is incredible because these are multi-year contracts that used to be 10, 15, 20 million, now are measured in the billions of dollars. And that gives you future visibility. And that's why the stock continues to grind higher. Obviously, I think it's off a little given just the overhang across tech right now with Texas and a number of the other software names trading off. But overall, you can't dream up a better quarter.
And our analysts would agree. Coming into this report, we had our BI analyst who said Microsoft is poised to benefit from the transition to the cloud, even much more than Amazon. And you mentioned they're taking business from Oracle and IBM. What are they doing that some of the other cloud companies are not?
Well, they got to Azure early, right? This is years in the making. And I think the legacy vendors did not pivot quick enough. I think secondarily, they've added, the whole Microsoft suite, from server products to desktop to new applications. They've been very open about embracing new technologies like Linux, which in the past they never were open to. So they've been agnostic to what is going to go on your desktop and effectively just saying we want to be the back end to help support that. And so I think it's been great leadership, and it's been multi-years in the making. I mean, honestly, they're reaping the success of years ago decisions they made strategically, and now this is paying off. And I think they're gaining the trust of many of the top corporations that use their products and are realizing that, look, they want to use Amazon, they want to use Google, but they're using a lot of Microsoft too. So large enterprises are using both either Amazon or Microsoft Cloud. So this multi-cloud world continues in large enterprise. For small and mid-sized companies, they're banking on one cloud, and there's really a couple choices.
And Brent, away from the cloud, are you seeing enough broad-based demand in some of their core businesses, that legacy IT, that if cloud were to slow, there is enough support in some of the other business lines?
So they have an upgrade cycle to Windows 10 on the desktop that will wane. It's a tailwind now to the beginning of January. It turns as a headwind at the beginning next year. So I think there's going to be some questions on the call. How much demand got pulled forward on the traditional PC side because you have a basically end-of-life product. So I think that's something that we're watching. But again, I think that's more of a rounding error. And what's more important is just the success they're seeing across the board in cloud.
Brent Thill of Jefferies, thank you for joining me. And coming up, hot tub conference calls, tequila, plans to live forever. The Adam Neumann era of bizarre excess has come to an end at WeWork. But how are employees feeling about his $1 billion payout? That's next. This is Bloomberg. It is the end of one of the more dramatic business debacles in recent memory. Now, SoftBank has come to the rescue of WeWork with a $9.5 billion package. The Japanese conglomerate will get 80% of the office rental startup. WeWork founder Adam Neumann will walk away with about $1.2 billion. Last January, as we remind you, WeWork had a $47 billion valuation. Now, this bailout values the company at less than $8 billion. To discuss, I'm joined by Bloomberg Technology's Ellen Hewitt, who covers WeWork and all things WeWork and SoftBank. $9.5 billion. Walk me through the components of that.
That's right. There's three parts. There's a $5 billion debt package. There's a $3 billion tender offer, about $1 billion of which is available for Adam Neumann to use if he would like to sell back his shares. That's up to him how much to take advantage of that. And then $1.5 billion of basically an accelerated warrant in which SoftBank is going to be taking even more ownership of the company, buying some more shares.
Now, the key here is SoftBank is coming in at a lower and lower average price per their transaction. So if there is a payoff, they could win big. But what do the other investors feel who are still bought in at these high prices and aren't participating in this lower round of shares?
This is going to be an ongoing conversation for WeWork and for the details, figuring out the nitty-gritty of this deal, because as you mentioned, you're right. SoftBank is doubling down on its ownership with WeWork and buying shares at a lower and lower price. In particular, this $1.5 billion of the package is coming in at much lower than even the tender offer. So they're snapping up shares. They clearly believe that if in the future this could end up being very valuable, that they'll come out with a win. At the same time, you have a lot of employees and other shareholders who are looking at these prices thinking, how am I ever going to get what I expected this equity might be worth? And in particular for employees who joined when they still got options, many of them are underwater. This is something that even came up today in an all-hands meeting with Marcelo Claure, who's now the executive chairman of WeWork. Employees are really concerned about how this is going to play out for them.
Describe some of the other reaction we got from employees when they heard about some of these bailout packages and some of these golden parachutes, if you will.
Yeah, in fact, one former employee even called it a platinum parachute for Adam Neumann. They feel like him walking away as a billionaire, I mean, to them it hurts. It feels painful that the company didn't even have enough cash to pay out severance packages for the thousands of employees they plan to lay off. And meanwhile, Adam Neumann walks away with, on top of his tender offer availability, a $185 million consulting fee, which at the all hands this morning, Marcelo explained to employees that fee was something they had to pay Adam to get him to agree to a non-compete and to remove himself from the board.
So during that all hands on meeting, the co-CEOs and the chairman also came out to make sure that they are emphasizing profit over growth. Ellen, frankly, at this point, one would hope, when do we get there?
That is a big question up in the air. We're really not sure. It seems like the company feels like it needs to act very quickly to try to show profitability. But to be honest, this is a company that was losing almost $1 billion in the first half of this year. So in order to turn things around, they're going to have to make dramatic changes, and I don't imagine it's going to happen overnight. But this is the new mission of the company. It's no longer growth at any cost. They have really turned that over.
And finally here, do they feel that the ship has stabilized? You had a lot of executive departures, some frustrated employees. They've come around and said, thanks for hanging in there, going forward, all hands on deck. We're trying to boost morale. Is that working?
I think if you're an average employee at WeWork right now, you are still concerned, am I going to have a job in a couple weeks? Because they've confirmed layoffs are coming. They won't talk about when, but we know they're soon. It's going to be a major part of the company that is going to no longer be working there. So morale is low. We've talked to many people who say that people are just not showing up for their job. The internal Slack channel, IPO Talk and News, is lit up with employees who are frustrated with how this is happening and feeling scared about the future. And you can't blame them.
More and more changing parts, and on top of it is Bloomberg Technology's Ellen Hewitt. Thanks for joining. And coming up, it is all back to Facebook. Mark Zuckerberg may be done with testifying today, but lawmakers are not done with Facebook or its proposed cryptocurrency. More fallout from Wednesday's hearing next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. Back to our top story. So Facebook CEO Mark Zuckerberg is defending his social network before Congress. Let's take a listen to what some of Wednesday's exchanges between Zuckerberg and lawmakers.
Is it a currency? Are you a bank? What is this association?
It's a very complex project, and as you say, it's risky.
Do you consider Libra to be money?
I consider Libra to be a payment system.
So it's like me having my money in Wells Fargo Bank.
You could think about it that way.
Okay.
Although we're not a bank, we're not applying for a bank charter. I think that the right analogy.
But that's the problem.
This is a
Mr. Zuckerberg. That's the problem. That's what we're facing here.
My commitment is that we're not going to launch the Libra payment system here or anywhere else around the world until we get the approval from FSOC and the other relevant U.S. financial regulators.
The American competitiveness angle and the competition with China is a national security issue.
In China especially, they immediately kicked off this public-private partnership with some of their biggest companies in order to race to try to build a system like this quickly.
Will it be possible to conduct anonymous transaction using Libra? There's a whole host of problems. So will Libra allow anonymous transactions?
I think that it is an open question.
It's pretty hard to stop anonymous trading. Have I missed something there?
Congressman, I think that this is probably more of a policy issue and question.
No, but as your code currently exists, can you transact anonymously with Libra?
Congressman, it certainly would be possible to build a system that would allow that.
I want to ask you a very simple question. Mr. Zuckerberg, are you a capitalist or are you a socialist?
Congressman, I would definitely consider myself a capitalist.
Frankly, I'm not sure that we've learned anything new here.
Joining me to discuss in Washington is Karen Petro, managing partner and co-founder of Federal Financial Analytics. It's a Washington-based advisory firm, and also in Washington, deputy director of the Open Markets Institute. That is Sarah Miller. Karen, let me start with you. Is there any more trust with regards to Facebook and Libra today than there was yesterday?
Oh, I think nothing was answered other than the commitment that Libra will get regulatory clearances before launching, but from whom, how, for what, and whether the product exists after that, I think is very much still to be determined. It was a promise, but not one with any specifics, any timing, or in my opinion, any clarity.
And Sarah, are the problems here not about Libra, but the fact that it's Libra and Facebook, and that Facebook's name is attached to this project?
I think that certainly doesn't help. I mean, from the hearing today, there are two takeaways in my view. One is that Libra is toast. Number two is that Mark Zuckerberg got roasted. Like, you know, he did not do himself any favors here. But the idea that regulators in the U.S. or around the world are going to allow Mark Zuckerberg to potentially undermine the entire U.S. financial system is highly unlikely at this point. So I don't think he did himself any favors at all. And it just opened him up to being a punching bag from both the right and the left on a whole host of issues that went far beyond Libra.
Karen, you chuckled a little bit when Sarah said that Libra was toast. Do you agree that Libra feels a little bit dead on arrival?
Well, I've said before that I think this is the worst product launch ever, and that's counting the new Coke. And the reason for that is because they didn't understand a very fundamental fact. The payment system, currency, financial transaction, it's about other people's money. Social media raises a lot of privacy and many other issues, but you're putting economic equality on the line when you start taking other people's money. And I don't think to this day Mark Zuckerberg or Facebook get that. This is different. And Congress told him that again today from both sides of the aisle, as Sarah said. And I'm not really sure they get it now.
Sarah, Zuckerberg brought up China and said if we don't act, China will. On this announcement, China already started making some of their digital cryptocurrency gains in the market as well. Is that an accurate statement, or is he just playing to our fears about China taking over?
I think absolutely the latter. A few years ago, right, we saw Facebook trying to find and create new censorship tools so they could launch in China. So there's no real principle here. And this talking point was actually rightly called out by one of the members in the hearing today, which was encouraging to me, saying, like, look, I don't think this is about us choosing China or else having to choose Mark Zuckerberg. I don't think that's a real choice. And he's absolutely right about that. Zuckerberg shouldn't be standing up there saying, if you don't let me do whatever I want, then China is going to take over, you know, our economy or take over this market. That's absolutely silly. We shouldn't be modeling our kind of corporate policy after the Chinese state.
And not only did we hear about Libra, but we heard a lot of commentary today about political ads and Facebook's decision to produce and take and promote political ads, regardless of if they are fact-checked or not. Take a listen to what he had to say about that.
we believe that people should be able to see for themselves what politicians are saying. That doesn't just go for Trump, that goes for any of the candidates for any of our national offices. People need to be able to see for themselves and be able to make judgments on what the candidates are saying and their character.
Well, I applaud you for that. And I don't want you to be bullied by politicians to relinquish our treasured free speech under the First Amendment. Protect it. And don't be bullied by politicians who want to censor politically incorrect speech.
Karen, let me get your reaction first. Isn't that smart? We don't want big tech deciding what's news, what's not, what's true, what's not. We want them to stay out and just be the platform, correct?
Well, we do, but Mark Zuckerberg said he wants voters to see what politicians have to say for themselves. I think what the concern is that a lot of what's on Facebook is other people pretending to be the politicians or speaking for them and speaking inaccurately. And the difference, I suspect, at least the one that troubles me a lot, is Facebook's responsibility not just to be open to free debate, but also open to fraudulent, deceptive, and even criminal discussions or misleading, doctored videos and so forth. That I'm not so sure is protected.
Sarah, we had Christopher Wiley on this program a few weeks ago, and he said Facebook was like a highway. They built this highway, so then it's their job to create laws and rules around it. Do you agree, or should Facebook just be the platform at which politicians can post ads and Facebook doesn't have to fact check?
Look, so our view is that the solution here is going to require action by Congress and federal agencies. And the solution is not to kind of tweak things around the edges. Facebook built a business on surveilling users and then using that data to manipulate them and sell ads to manipulate them. It's inherently, one, discriminatory. The business model itself is inherently discriminatory. And two, it's inherently extremely dangerous for democracy. It shouldn't be a communications platform that millions and billions of people around the world use that can also kind of supercharge this these sorts of manipulative content. So it's a business model question. It's about how they make their money, and it's not sustainable in a kind of democratic society. And it's as simple as that. That's going to require Congress and others to step in to address it.
Well, Sarah, when you talk about their business model, what is the case that Facebook should be sticking with their core business? Get out of Libra, get out of these side projects, and stick to fixing their business, which is the crux of the problem, at least when it comes to the elections.
Yeah, I mean, certainly they are in a position to do more on this. But at the same time, Karen was right. We don't want Facebook necessarily censoring what everyone is talking about, right? That's not the right role for Mark Zuckerberg in a democratic society. The business model itself is deeply problematic, and it is going to have to change at some point. And that's what these antitrust investigations can start to move towards.
Karen, Mark Zuckerberg said that the 2016 election clearly had caught them on their heels. Do you feel any more confident that they're more prepared for 2020?
No. I wish I could say yes. No. I know that just last week they shut a few folks off, but this is a very wily enemy, and I agree with Sarah. There's an inherent conflict between Facebook's advertising, surveillance, data manipulation, and data sales business culture, and an honest, free, fair election. You know, in the old newspapers, the ads for new cars were on different pages than the political commentary. Now it's all mixed up, and it's very hard to tell which is which and what's true.
Karen, finally, as we wrap up here, did you see a different Mark Zuckerberg today? Was he more prepared, calmer, more mature today than he was the first time he testified?
I'm so old. Asking me if he's more mature is a really unfair question. I think more fundamentally is, does he understand what's going on? Why Libra? Why Facebook is under such scrutiny? And I don't think so. This isn't a regulatory question, it's part of it, but it is really a structural issue. Sarah has pointed this out. This is a new business model with vast reach. Now it's a reach into money. Now the payment system is anachronistic. Mark Zuckerberg said today that the banking system is, I think he said, stagnant. And that is true. It has not been innovation. But one of the reasons for that is the rules, because it's other people's money. And you don't want to move fast and break things if the things you break are other people's life savings. And he doesn't get that. I don't think he does.
Well, what a roundtable. That was Karen Petru, a federal financial analytics and open market Sarah Miller. Thank you both for joining. And coming up, Tesla roars. The company reporting a surprise profit topping Wall Street estimates for the third quarter. We talked to analyst Dan Ives of Wedbush. He's next. This is Bloomberg. Tesla shares spiked in after-hours trading Wednesday after the company posted a surprise third-quarter profit. Tesla CEO Elon Musk took to Twitter, of course, less than an hour later, saying that he was, quote, super proud of Tesla team for great execution and support of Tesla customers. Greatly appreciated. With more on the earnings per share picture, margins, and what the company is saying about China, it is Dan Ives, analyst at Wedbush Securities. Dan, first of all, I have to show you a chart. Come into my terminal here at GTV Go. The story of the day has to be those margins. Is the margin picture for you what you needed to see this quarter?
Look, that's the key. I mean, if you look at the margins of profitability, that's the major feather in the cap for the bulls. And I think that's a surprise. I mean, this is really something that Musk and Fremont need to deliver here. Margins are the focus and profitability. And this is something where if they can maintain this would be a potential game changer for them going forward.
But Dan, the problem is you can't cut your way to growth. So if you're seeing a top line decline for the first time since 2012, is it sustainable to cut your way to growth?
Look, in our opinion, that's going to be the challenge for them to navigate profitability while they're trying to get the growth, given what's happening in China. That's going to be the key in the conference call. A major short covering that you're going to see, but that's really the key here for Musk and Tesla to navigate going forward.
Dan, part of the profit picture and the revenue picture has been the composition that we've talked about between the S, the X, and the Y, and all of those, and then the Model 3, which is that lower margin. How do you feel about the composition?
It's going to be, look, with Model 3, given where margins are, that's going to be the difficulty to get there from a margin perspective, given what's happened in S and X. Y is going to be key going to 2020. That'll be a big focus on the conference call, as well as China and the Giga 3 build-out.
So, Dan, you brought up the conference call. What is your question going to be to management?
Biggest question is 2020 profitability. What does it look like with the China build-out? And what does sustainable demand look like into next year? What the composition is. That's going to be the key here for Musk and Tesla. This is a major positive for the bulls. Is it sustainable? That's what they need to show on the conference call.
Well, and as you mentioned, all eyes are on 2020 profit. Dan, I show you another chart here that what I'm looking at inside my terminal, and it is a very similar story, which is free cash flow. We are getting positive free cash flow, but is it sustainable?
That's the point. I mean, will they be able to sustain free cash flow? And will they eventually have to raise more capital? They put that off the table today in terms of these numbers. But as we've seen with Tesla, it's been a one step forward, two step back story. That's going to be the key going forward.
Are you confident that they can produce 1,000 vehicles a week in Shanghai by the end of the year?
I am not confident in that. I think that's going to have to be delayed. That will be a focus on the call in terms of China, because ultimately, for Tesla stock and for production demand to go higher, it all depends on Giga 3, and that's going to be a focus in terms of what the timing looks like on China.
So, Dan, a share price reaction, 10, 20% in after-hours trading, is that warranted?
Look, I think it's more of just a massive short covering. I mean, no one thought you'd see a profit this quarter, and obviously a profit into next quarter. You'll see a knee-jerk reaction. This is a step in the right direction. The stock's going to get re-rated higher. A 20% move, in my opinion, is overdone. we'd be a seller of that move.
You know, Dan, we speak about profitability, and lo and behold, Lyft comes out this week and says that they are going to post a surprise profitability by the fourth quarter of 2021. Your take?
That's really what investors need to see. I mean, they need to get profitability quicker. More and more pressure for Lyft. I think that was the right move to announce that. They could gain share from investors because right now investors are not looking at non-profitable stories. Lyft needs to show the path. I view that as a positive and something that they'll talk more about in their conference call next week.
And how much of this, when we talk about Uber looking at margin expansion, Lyft trying to go for profitability, is real fundamentals of the company or management of that company looking around at the environment where growth at any cost, frankly, doesn't work anymore, and they're saying, we better get a grip?
Look, as a public company, the pressures have changed. And I think right now, Uber, a lot more pressure in the kitchen for Dara and company, especially with Lyft talking about profitability sooner. And remember, Lyft's only a domestic player. But the big variable here, and what continues to be a massive overhang in the stock, is AB5 and the legislation in California. That really continues to be a very fluid situation. That's an overhang on both Lyft as well as Uber.
And I see your coverage of Lyft. I want to ask you a story about Uber if you can. We did have a story saying that Uber's U.S. margin expansion would exceed Lyft's margin expansion within the U.S. Do you agree with that?
Look, I agree. I think right now there's a lot of pressure on these companies in terms of managing profitability and take rates. It's going to be market share gain, but that's why this is a pivotal earnings season for Lyft as well as Uber, as right now investor credibility is really small in terms of what you're seeing on these stocks, and they need impressive quarters and guidance going forward to move step in the right direction.
Wedbush analyst Dan Ives, thank you for joining me. All things Tesla, Lyft, Uber, and of course, profitability. And still ahead, the streaming wars continue, and Apple wants to be on top. We discuss the company's plan to gain the top spot in that crowded market next. This is Bloomberg. Shares of Apple hit a record high this week. Morgan Stanley has raised its price target to the highest on the street. The firm calls for Apple to hit $289 a share, mostly on next month's release of the Apple TV Plus. That implies a 20% upside from Tuesday's close. And sticking with Apple, the tech giant is buying its way into Hollywood with a massive budget for TV Plus. The streaming service debuts next Friday with original shows starring celebrities like Reese Witherspoon and Jennifer Aniston. But Apple is positioning itself in a highly crowded market. To discuss, I bring in Bloomberg News reporter Chris Palmieri. Chris, what is your general takeaway about how crowded this market is, and where does Apple fit into that?
It's very crowded and getting more crowded every day. I mean, there are already kind of dozens of streaming services competing for customers. There'll be more launched over the next year. People are saying, oh, you know, the most a customer will subscribe is maybe 3 or 4. So there's going to be both a mad gold rush and a big shakeout over the next couple of years.
Chris, I want to show you a chart that I'm showing for our Bloomberg audience here inside the Bloomberg terminal, which you know the story. You've been covering Apple. It is total cash of $200 billion minus net debt, which gives you net cash of $108 billion. If anyone can take on Netflix or Disney, is it Apple, frankly, because they have the cash?
Well, that's sort of one of the ironies here. I mean, certainly Apple's brand name, cash, the customers all around the world, it would seem to be the most formidable competitor, but at least in terms of Hollywood, it's kind of the least feared, and that's because its strategy hasn't come into focus. If you look at some of the other tech players, Netflix made original content based on what its most popular shows were, directors and actors. Amazon went after initially this sort of bookish urban, viewer. Apple doesn't seem to be that focused. They just seem to be paying top dollar for well-known celebrities, which is kind of the mistake people make when they come into Hollywood.
Chris, Netflix had a great strategy, which was original content. Disney Plus, when they launched, they have all of this backlog of old content that they can push forward. Any sense that Apple is really going to be targeting original content, or can they also bring in some older content as well by partnering with someone?
Well, they're focusing entirely on original content, which, I mean, people will tell you it's original shows that make the difference if you look at the surge Hulu's had in the last couple of years. But you also need the catalog. You can't do it with just that. And that's sort of been one of the most perplexing things about Apple's strategy. With all the cash they have, why don't they buy a library of movies? And are people just going to go to see this one movie or two shows that they're launching at start? It's a very confusing strategy for a lot of people here, but we're all watching.
Chris, finally, quickly here, it was very interesting in terms of strategy. T-Mobile had been offering their customers Netflix. Verizon has been offering their customers Disney Plus. Any sense that Apple here really just does go it alone, or do they partner with someone?
Well, they have their deal. Basically, if you buy an Apple product, you're going to get a year of this new service. And a lot of people think that's really what this is about, linking the hardware to the content.
Bloomberg's Chris Palmieri, thanks for joining. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.